Quick question for you. Did you watch the news this weekend? Because while most people were watching Netflix and checking their fantasy sports scores, missiles were flying, troops were mobilizing, and the Middle East just lit up in a way we haven't seen in years. A new conflict has broken out. The details are still coming in. But here's what I know for certain. War is a tragedy for humanity. And in the markets, war is a signal. Right now, that signal is screaming at you from three very specific charts. I've been doing this long enough to know when geopolitics ignites, defense stocks don't just move, they launch. And tonight, I'm going to show you exactly what I'm seeing in three of the biggest names in the aerospace and defense sector. And I promise you, by the end of this video, you're going to look at these charts and wonder why you weren't paying attention sooner. Welcome to Chart After Dark. I'm your host, Guhan Ilgazli. And if you're new here, this is where we cut through the noise and find the setups that mainstream financial media doesn't want you to talk about. Before we get into it, if this is the kind of analysis that is valuable to you, do me a favor right now. Hit the subscribe button, share this video with at least one person in your life who trades or invests. You might literally save their portfolio tonight. All right, stock number one tonight, General Dynamics. We're going to be looking at the weekly chart. Current prices at around $364.78. All right, General Dynamics weekly time frame. And I want you to look at this thing like a piece of art because that's exactly what it is. Going all the way back to 2020, this stock has been living inside a rising channel. As you can see, two parallel trend lines perfectly contained, almost textbook. You get the lower support rail, you get upper resistance rail, and for years, the stock has respected both of them, like clockwork. Now look at March 2022. I've marked it right here. Price tags the upper channel resistance and immediately backs off. Sellers show up, stock pulls back hard, all the way to the lower channel support. That's the channel doing exactly what a channel does. Beautiful. Fast forward to October 2025, same situation. Price reaches up, tags the upper channel, resistance, and again, boom, sellers come in, another rejection at the top. But here's where it gets interesting. Right now, March 2026, price is attempting to push back up into the upper channel zone again, and we're sitting right at the edge. We've had two clear rejections at this level. The question every trader needs to be asking is, does the third time produce a breakout or another rejection? Given what's happening in the Middle East this weekend, the fundamental tailwind for defense spending just got a whole lot stronger. Contracts, budgets, NATO allies scrambling to rearm. General Dynamics is a direct beneficiary of every single one of those conversations. The channel support sits down at around $295 to $300 on the weekly chart. If price holds inside the channel and starts compressing near the top, you want to be watching for a decisive weekly close above that upper trend line. That would be the signal. Until then, respect the channel, don't chase, wait for the break. All right, stock number two, Northrop Grumman, NOC, weekly chart. Current price is sitting at $768.02. Now, this is the chart I want you to really pay attention to because Northrop Grumman just did something that I haven't seen in a very long time on this weekly chart, and I've marked it right here for you. Look at this long-term rising trend line going back to 2018. August 2019, price tags the trend line, holds, bounces. October 22, price comes back down, tags the trend line again, holds, bounces. This line has been tested twice over the course of years, and it's held both times. That's not a coincidence. That's a major structural trend line. That's institutional memory. The big money knows where this line is. They've defended it twice. But look at what just happened. Price didn't just bounce off the trend line. This time, price exploded through it. And I've marked it right here. This is a gap above the trend line. Price gapped up, pushed through, and is now trading above a trend line that has been resistance and then support for the better part of a decade. Do you understand what that means technically? When price gaps up above a major multi-year trend line, that's not a small event. That's a regime change in the chart. The sellers who defended that line for years just got run over. And now that former resistance becomes support. The trend line that once capped price is now the floor. Northrop builds some of the most advanced defense systems on the planet, the B-21 Raider, missile defense systems, cyber warfare platforms. As global tensions escalate, the order book for Northrop doesn't just grow, it explodes. And this chart is reflecting exactly that. The gap above the trend line is the setup. Watch for any pullbacks into the gap zone, roughly the $700 to $725 range, as a potential re-entry opportunity if you miss the initial move. That's where former resistance becomes new support. That's where the chart gives you a second chance. This is one of the most powerful setups on my radar right now. Okay, And the third stock of the night, RTX Corporation, Raytheon. And that's the maker of the Patriot missile systems, Tomahawk cruise missiles, the company that is arguably the most directly tied to active conflict of any defense name on the board right now. And this chart on the daily time frame just gave us one of the cleanest technical signals I've seen in months. Look at this rising trend line from September 2024. Price has been grinding higher along this support line in a very orderly, controlled fashion. No fireworks, just steady accumulation. Smart money quietly building a position while retail wasn't paying attention. Now look at the horizontal resistance zone I've marked in pink here. Price approached this level multiple times, November 25, December 2025, and got rejected every single time. That level was approximately $205. It was a wall. Every time price got there, sellers showed up and knocked it back down, until today. This weekend's geopolitical shock created a gap. Price opened above the resistance zone and is trading at $212. That's a gap above resistance, and it happened with real fundamental news driving it. This isn't a random technical glitch. This is the market repricing the probability of sustained elevated defense spending right now. Now, here's the nuance. And this is what separates the traders who make money from ones who just watch. A gap above resistance is powerful, but gaps can fill. The intelligent play here is to watch how price behaves over the next several sessions. Does it hold above the $205 zone, which is now support, or does it consolidate before the next leg higher, or does it immediately fade back into the range? If RTX holds above $205, $206 on a closing basis, the technical target on the daily chart is wide open to the upside. If it fails to hold, gaps fill. The price comes back to test their level. That becomes your entry point with a very clean, very defined risk level. With the Patriot missile system in demand from every NATO ally, every Middle Eastern partner, and every government that just watched this weekend's events unfold, fundamental case for RTX just got a lot more urgent. Okay, 3 defense giants, 3 powerful technical setups, and a geopolitical backdrop that just changed over the weekend in ways that are still being fully processed. GD is testing the top of a multi-year channel. Watch for either a breakout or a third rejection. NOC just gapped above a decade-long trend line, one of the most significant structural moves I've seen on the chart, and RTX just gapped above a key horizontal resistance level. And the fundamental catalyst is as real as it gets. Now, I'm not telling you, obviously, to go buy anything tomorrow. Remember, folks, this is all educational. This is not financial advice. But that's not what we do here. We read charts, we identify levels, we wait for confirmation. Chasing gaps is how retail traders get chopped up. Be patient, know your levels, have a plan. If you found this breakdown valuable, and I think you did, I hope you did, subscribe to the channel right now. Every day and week, I break down these setups that matter before the mainstream media figures out what's happening. Share this video with someone who needs to see it. I'm Guhan Ilgazli. This is Chart After Dark. Stay sharp, stay disciplined, and I'll see you on the next one.